Commercial real estate collapse will soon cause major foreclosures and bankruptcies. Hi folks, welcome to the Financial Argument. The commercial real estate market seems to be taking a turn for the worse. Is there a fatal crash on the horizon? When we study the indicators and recent events, it appears there won't be a recovery. The situation will continue to deteriorate. It'd be nice if someone would just come out and announce that the health crisis is over and we can go back to the normal way of life and a healthier economy, wouldn't it? Well, it seems that some forces think this is how it works, or at least they act that way. According to them, everything starts and ends with the snap of a finger. But now they realize that they can't control the economy even by printing trillions of dollars, and it's too late to salvage the situation. In fact, many people are not aware of the permanent damage caused by the economic destruction of the last few years. The U.S. debt has already exceeded $28 trillion, and unfortunately, corporate debt is increasing day by day. This means there's close to $85,000 in debt for every American citizen. Of course, no one will be sending you a bill and asking you to pay $85,000, but you can be sure, at the end of the day, this debt will indirectly be taken out of your pocket. It always is. Let's take a look at the impending commercial real estate collapse, which will accelerate this downward spiral. The global financial system is still recovering from the last economic crash when the world couldn't do anything but watch in horror as the economy fell apart. Whether you're aware of it or not, this crisis, directly or indirectly, took a huge hit on people and businesses, especially for individuals who lost their jobs and went on unemployment. These people have nothing but unpaid bills staring them in the face. This collapse will continue, and one of its major components is, without a doubt, the commercial real estate crash. The real estate market has always been highly profitable, but did not remain immune from the crisis. As we all remember, Lehman Brothers infamously went bankrupt in 2008 when mortgage-backed securities spurred the financial crisis that rippled through the entire world. This time, mortgages and CDOs are not the main actors in the game, but corporate real estate plays the starring role. Before the current health crisis, most people went to work in an office. However, as of last March, the idea of going to an office started becoming more obsolete, at least for some. HSBC, for example, one of the largest banks in the world, plans to cut costs by 40% by moving much of their staff from London to Hong Kong. The president of the European Central Bank, Christine Lagarde, previously the head of the International Monetary Fund, told the press that the bank plans to transition into a mix of home and office work. Many companies have realized the possibilities afforded by allowing employees to work from home full-time or part-time. They now see they can cut costs and still run their companies efficiently. Of course, some companies are in a rush to get their employees back into the office, but the impact the crisis made on how businesses will run in the future is significant. Things are changing, folks. It's been more than 1 year since the restrictions were put in place. Unemployment skyrocketed, and the Federal Reserve began printing money to fund corporations and individuals. Some of this money went directly into the crypto market and funded Bitcoin, Ethereum, Ripple, and many others. Additionally, we entered a bull market and saw new all-time highs in the S&P 500, for instance. Meanwhile, more than 300 retail companies filed for bankruptcy. The Federal Reserve's printed money did not fund the commercial real estate and retail sectors as shops, malls, and offices were shut down for a long period. Retailers were not able to physically sell goods, so many landlords were not able to collect their rent. This put the whole industry in a perilous situation. Not many realize the magnitude of it. Growing numbers of retailers have reached their limit and filed for bankruptcy. Companies like GNC, Brooks Brothers, Hertz, Gold's Gym, Guitar Center, Chuck E. Cheese, Lane Bryant, Ann Taylor, Neiman Marcus, JCPenney, Tailored Brands, the parent company of Men's Warehouse, Century 21, Payless, Lucky Brand, Aldo, and the list keeps growing. Granted, some of these companies like Pier 1, Payless, and Century 21 have been struggling for years. However, we cannot disregard the damage done to the retail industry. JCPenney managed to survive bankruptcy after being bought up by the two largest mall owners in America, Simon Property Group and Brookfield Asset Management. They still face significant challenges, and we will see how well they fare in the coming months. With retailers struggling and filing for bankruptcy, mall owners continue to hang on by a thread and face serious risks. CBL Properties and Pennsylvania Real Estate Trust, two major mall owners, filed for bankruptcy in 2020. Hotels have not been spared either. In Japan, for example, hotel bankruptcies jumped 57% in 2020. Data shows that entertainment companies, real estate firms, oil and gas companies, restaurants, and retailers have been hit the hardest, which doesn't come as a surprise. Bankruptcy filings went up 20% in 2020 compared to 2019. New Generation Research reports some alarming statistics. In 2020, bankruptcy rates doubled for computer and software companies and tripled for oil and gas companies. The number for entertainment companies almost quadrupled. Rates for restaurants, retailers, and real estate companies increased by at least 50%. Rosendo Gonzalez, Los Angeles bankruptcy attorney, also told the Washington Post, "Restaurants I know are having a hard time, and it's just a question of when they are going to file." I previously posted a video about the small business collapse. Take a look at it, and you'll see how these collapses are correlated to each other, creating a domino effect on the American economy. And we haven't seen the worst of it yet. Many of these bankrupt companies will not survive, meaning lost jobs, unpaid bills, and foreclosures. Take a look at this chart. This is just a fraction of the more than 340 companies that filed for bankruptcy: airlines, gyms, restaurants, oil producers, and many more. Hertz, for instance, has more than $25 billion in assets. Poof, bankruptcy. LATAM Airlines with more than $21 billion, another lost cause. Frontier Communications, Chesapeake Energy, Ascena Retail, and hundreds of others join the list. Who will pull them out of the fire? Printing money won't fix this. According to Cushman & Wakefield's Market Beat report for commercial real estate for the first quarter of 2021, San Francisco's commercial real estate vacancy rate went from 6% in the first quarter of 2020 to 18.7% in Q1 of 2021. Real estate firm CBRE reported that more than 17% of office spaces in Manhattan were vacant in March. The market value of office towers in Manhattan decreased by 25% since 2020, according to city projections. Big companies like Ford, Salesforce, JP Chase are increasingly turning toward remote work and cutting down on real estate. Jamie Dimon, CEO of JP Chase, wrote in a recent letter to shareholders that the bank would need only about 60 seats for every 100 employees. Only 25% of workers in the country's 10 largest metro areas have returned to work. As more people become vaccinated, many companies choose to maintain a remote work or hybrid system after seeing how viable it is and how much they can save on costs. What will property owners do with all the empty spaces when some companies opt not to leave once their leases are up? Salesforce is already subletting half of their office space. United Airlines has announced they're giving up over 17% of their office space in Chicago's Willis Tower. Real estate services company Newmark reports that asking rents in Manhattan went from about $82 a square foot in early 2020 to around $74 a square foot in 2021. The tourism industry in New York obviously took a huge hit in the last year, with a reported $1.8 billion in delinquent balances for New York hotels, the highest in the country. Meanwhile, some developers and even government officials see opportunities that can come out of the empty buildings and have decided to take advantage of the situation. In LA and New York City, some city officials see the empty buildings as a way to handle the housing crisis situation by converting them into affordable housing. However, some developers state this can be difficult because of reasons such as the location and building codes. Real estate developers in New York City are exploring ways to convert offices and hotels into housing or turn hotels into short-term offices. Eric Anton, a Marcus & Millichap agent, says 3 of the 7 hotels he represents will most likely be converted into senior housing and another into market-rate apartments. Yellowstone Real Estate Investments bought up the Watson Hotel in Midtown New York for $175 million. They plan to turn one of the hotel's towers into market-rate apartments. With online retailers taking over even before the health crisis, there was already a great amount of change taking place in the commercial real estate sector. Amazon has been buying up shopping malls since 2016 in order to convert them into fulfillment centers. They've successfully converted 25 malls between 2016 and 2019. It's very clear great adjustments and creativity will be required to come up with solutions for the commercial real estate market and the economy as a whole. The Fed's answer is to print more money. All this achieves is to inflate the stock market artificially, and now several bubbles are about to explode, leading to hyperinflation. I posted a previous video about this as well. This time, printing money cannot and will not save the economy. In 2008, they tried to sweep the problem under the rug by printing billions of dollars. This time around, there's no doubt the real estate industry will crash. All the while, the money the Federal Reserve is printing goes directly to the stock markets that feed the new bubbles. When is enough enough? All in all, the commercial real estate sector is now in great danger, and there's little hope in turning it around. Billion-dollar companies are now gone. Once a bankruptcy is filed, that means it's only a matter of time until most of them close their doors and employees become unemployed, continuing the downward spiral. As always, I try to warn you with my analysis about the economic reality we're faced with that no one speaks of. I hope those who are asleep will wake up and prepare themselves accordingly. Don't forget to like, share, and subscribe. God bless you all.